Hey, what's up, guys? Today is Wednesday, March 15th, and this is your midweek update video. So, round of applause. You've made it to the halfway point. And now, of course, we've got to make sure we get through tomorrow and Friday unscathed. Unscathed into the weekend. But we'll jump in, guys. The advice I gave you coming into the week was short the bounces, and so far it's been a pretty good game plan. But a little bit bigger picture. Going to give you guys a nice history lesson here tonight. So the key level, right, the big level, the big one, 3650-ish, the monthly 50 SMA. The bulls have got to do everything in their power to keep the market above that level. And reason being is, right now all the, everything's lining up for a monthly sell signal. The only thing that's missing to print that would be a move under the monthly 50. So the momentum, the moving average crosses, everything else lines up here to print that bad boy, other than that move under the 50. So from here, if we take out the 50, which is 6 or 7% under today's close, take out the 50, we're going to get our first monthly sell signal since the 2008 financial crisis. So quick history lesson here. Allow me to take you back to 1970. Taking y'all way back. So the life and times of a monthly sell signal. December 1969, monthly chart pumps out a sell signal around $90, and we go on to put in a low around 65. Pretty big flush. Again in November of 1973, we get a monthly sell signal around $100, and we go on to put in a low around 60. From a hundo down to 60. You did have some monthly sell signals back here in October of 1977. That took your market from $96 to about $85. You had a couple more back here in 1982, 10 years before I joined the party, and that took us from about 115 down to about $100. So pretty good flush there. And then things were pretty peachy for a few years. Until July of 2001. We get a brand new monthly sell signal around 1200, and we go on to put in a low around $800. So 12 hundo down to 800. And 2001, of course, was the dot-com crash. They popped the bubble. And now your most recent monthly sell signal printed back here in June of 2008. And 2008, of course, was the financial crisis. Or so they tell me. That prints around $1,300. We go on to put in a low around a little bit under $700. And that was the last time you had one of those bad boys. So the point I'm trying to make here is all your historical market collapses, crashes, recessions, bear markets, all the big ugly ones, now we'll call them fugly, all the fuglies start with the sell signal on that monthly chart. In other words, the party doesn't begin until that monthly sell signal shows up. So, for what it's worth, I'm not here to say it's going to happen. For all I know and for all we know, a month from now we could be back up here at 4,800. But in terms of the path of least resistance and in terms of the probabilities game, the bulls have got to do everything in their power to keep the market above 3650. Take out the monthly 50 for the first time since June of 2008. Your monthly chart will go bearish. And from there, guys, I would actually look for a move down towards your COVID lows. All right. The ebbs and flows are usually the same across any time frame. So for sake of conversation, pretend you're looking at a 15-minute chart. Well, if your 15-minute chart loses the 21 EMA, loses the 50 SMA, and then you get a 15-minute sell signal, you're usually coming down towards the 200. Unless, of course, they can actually come in there and cancel that sell signal. So I found that rule applies on a 5-minute, a 15-minute, a 30-minute, a weekly. And if we look in the time machine here, that same rule applies on the monthly chart. So we're not there yet. Not saying we're going to get there, but we got to keep a close eye on that. If we wake up one of these days, and that monthly chart actually prints that sell signal, Then the party starts. And then we short the shit out of it on every single bounce. But we're kind of already doing that right now. So there's your history lesson. And some scary stories for you there tonight. But as far as a day-to-day, which, for now is all we can focus on, the charts aren't looking any prettier. So yesterday, which was Tuesday, you had your gap up. They pumped it all the way into that daily 200, and that was one of the first levels I gave you guys this week as far as short that bounce. Short it into the daily 200. We can short it into a daily 21. We can short it all the way up here to that daily 50. So there was your chance to pounce yesterday. Pump it towards a moving average. Everything gets a little bit tired, and down we went. So yesterday we jumped into a couple of April expiration 40-25 call credit spreads. And we're keeping it simple, guys. They bounce it tomorrow, they bounce it Friday, they bounce it any point next week. If that bounce can't fix all the problems, right? The way I look at it is the Titanic has hit the iceberg. So if the bounces can't patch up the problems, we can't patch up the the gaping hole in the side of the boat here, she's gonna sink. So keep on working that game plan. And then another name that I covered with y'all, I think in Monday's video, was actually gold. And I continue to think if anything is worthy of buying on a dip, probably going to be the gold bug here. We've got a monthly chart sitting pretty in a monthly squeeze with a monthly buy signal. So I gotta like that marriage. Inside of your monthly chart, you get a weekly chart that, for now, does behave like something that actually wants to trend higher. Got your first push to the upside. Indicator goes bullish. First back test of that 21 EMA. That's where you finally get a chance to learn what she's made of. And it passes that test with flying colors. Pulls back towards a moving average. Holds up like a champ. Stabilizes. Indicator keeps on pumping out that buy signal. And from here, I think you're heading back towards these recent highs, most likely. They break it through the recent highs. Think she's off to the races. So good looking monthly chart, good looking weekly, and the daily. Daily looking pretty sharp as well. So the only problem here, I don't have a good entry. Gotta wait for a bit of a flush. Then we might go on ahead there and jump in. So we're shorting the rallies in the S&Ps until proven wrong. We're waiting to buy a dip in gold until proven wrong. And then the only other thing I think we want to take a look at here tonight, it's an interesting market, right? We know what the S&Ps look like. Under the 50, under the 21, under the 200, cranking out a sell signal. The Dow, the big Dow 30, all 30 of them, under the 50, under the 21, under the 200, cranking out a sell signal. The IWM, under the 50, under the 21, under the 200, cranking out the sell signal. That all suggests we're in trouble. Things can easily go lower. However, the Qs here, the Qs are fighting that good fight. Much better structure to your daily chart and the weekly chart. Believe it or not, I wouldn't lie to you, the weekly chart for now actually prints a buy signal. So it's a classic battle where the S&Ps, the Dow, the IWM look like death, and the Qs are actually trying to keep the ship afloat. Right, trying to keep the Titanic above water. So names like a Microsoft, you're up 2% here today. And that actually goes bullish on your daily chart. Let me see, Amazon was up 1 and change, Google was up 2 and change. Apple wasn't up too much, but decent structure. AMD had a good day, up 2.5. Nvidia had an okay day. Point being, you've got a couple of big shots, a couple of heavyweights trying to keep the ship afloat. Now maybe they can. Maybe QQQ is just, so freaking strong here over the next few days. The rest of the market rallies and joins the party. Maybe. But what I think you want to do is keep an eye on an Apple, keep an eye on Microsoft, keep an eye on the QQQ. Look for signs of these products throwing in the towel. Right, Google, Microsoft, Apple, the Qs, they begin to wave the white flag. Then I think you really start to see the market really unwind. All right, Apple is really heavily weighted. Microsoft's got some meat on the bones. Amazon, of course, they can do a decent job of trying to keep things intact. But if they break down, then it's pretty likely the Qs will join the bear party. All right, and pretty quickly, they'll probably start looking a little something like the S&Ps, the Dow, or the IWM. So if you happen to be bullish on the market, what you would want to see here is continued strength and continued outperformance in Microsoft, Google, etc. Otherwise, guys, the S&Ps, the Dow, the IWM painting a pretty clear picture here. So to reiterate, short rallies into the daily 200, short rallies into the daily 21, short rallies into the daily 50 in the event they get the market back above 4K. Pump the brakes for a little bit, step back, reevaluate, and take it from there. But for now, we're going to keep on rocking with our 40-25 call credit spreads and patiently awaiting the next good entry. Whether that be short in the S&Ps or buying the dip in the gold bug. But there you have it for tonight, guys. Midweek update for Wednesday, March 15th. As always, hope you found it helpful. If you haven't already, go on ahead and hit the subscribe button, but I am exhausted. And I gotta hit the hay here. What time is it? 7 o'clock at night. Ready to hit the hay at 7 o'clock. So I'm out of here, but I'll talk to you guys soon. Adios.